on what's made this possible. And I would like to start off with the fact that there are many, many, many volunteers behind this event. And you should, again, on the website, you will see this is a very small, because, there are so many folks. It's a very tiny image. So whether it's emails, the social media, the communications before and after the event, all of this has been made possible by an army of volunteers. Each session has a curator. So we've had many people sort of like really work with the speakers to curate the sessions. Finally, there's the program team that has sort of put together the structure of the event and, gone over what are the kinds of sessions that we should be bringing together for this year. And finally, none of this is possible without our sponsors. So we have Accel, Microsoft, Sequoia, Tiger Global, Westbridge Capital, B Capital, 8 Roads, and Nexus Venture Partners, who have all made this event possible. Finally, before I close out, we have feedback. We have a feedback form that will be circulated at the end of every session. Please email hello@SaaSBOOMi.com for any questions that you have or any feedback. And yes, we've been waiting for these sessions. So I will not introduce the sessions in detail because we'll be going into it right now. But both Zenoti and Browserstack are unicorns who've just grown over the last year even more. And we have the founder and CEO of Zenoti, Sudhir, and the founder and CEO of Browserstack, Ritesh, being joined by our curators, Shekhar Kirani from Accel and Manav Garg, CEO at Eka Software. So without further ado, I will hand this off to Shekhar to carry this forward.
Okay. Can you hear me okay?
Yes.
Okay. Sudhir, you're on?
Yes, I'm here.
Wonderful. Okay, cool. So good morning, everyone. I guess good afternoon for some of the folks dialing from some other parts, and good evening for people dialing from the US. Great to be here, as we said on the chat, missing the beach, missing the buzz. Feels good, like, coming back to the community of SaaS. At least for me, it's the heart and soul of this group has been, building my career at Accel as well, and me being benefited from talking to all of you. Thank you. So today we have Sudhir with us. Sudhir, congratulations on a phenomenal success and another, a big raise recently. So what we would do today is, I think we have almost 45 to 50 minutes. I would try to focus our energy as much as possible during the early days of Sudhir's Zenoti journey, and how those decisions helped him scale where he is today, so that some of the learnings from his journey can be applied to kind of all of you. And I know, obviously, it's very contextual, so you have to pick in the context of what he has done. So, but at least you will understand the framework of how the decisions were made. So just a 10-second intro about myself. I'm part of Accel, an early stage seed / Series A investor. I have focused my life around at Accel around SaaS investments. And we have done, even Sudhir's investment happened very early on. I think we were the first professional check there. So does many of you on the call have interacted with several of you. So, with Freshworks also very early, ChargeBee, Facilio, CareStack, bunch of SaaS companies now, and feel great to be part of this group. So Sudhir, let's get started. Maybe a quick 1-minute summary of what does your company do, so that people understand who are new to Zenoti.
Yeah. Hello, everyone. So firstly, I wanted to make sure you all know I'm in Seattle. So it's like almost 10 p.m. for me. And I usually am in bed by 9 p.m. So take that with so that, I'm an early morning person kind of stuff. But in terms of, what we do, Shekhar, we basically for salons, spas, fitness, yoga, medi spas, laser, skin. It's a very niche vertical space where we do the end-to-end software for these businesses. And, for everything from the front desk to the back end of the business, we are a very comprehensive solution for large brands. So in India, it would be people like Kaya, Lakme salons. We run the entire business of these companies other than their financial accounting, basically.
Just for the people to understand how big the scale is today, like maybe number of customers, number of regions, where all you operate, and number of employees.
Yeah, I would caveat that we are a little lower, like 50 million in ARR. We have, almost 700 employees now. In India, a large chunk of them are in India, of course, about 450 employees, but we have offices in Seattle, in Vancouver, a small office. Our biggest markets are the US, the UK, where we have a fairly decent presence, and Australia, New Zealand, which is the third market for us. And then a lot of the rest of the markets like Middle East and Southeast Asia, also we have small offices.
Awesome, Sudhir. So good. So let's start into this. And people, if you have questions, please post on chat. I will try to incorporate those as well. How did you get into this? This is a very, very rarely we see people saying, I'll go and solve the software problem of wellness industry or a spa or salon. But you got in there. Maybe a journey of the 1 minute summary of how did you get into this and why this was important for you?
Yeah, see, I actually come from a very enterprise software kind of background. So I worked at Microsoft for 8 years. I did a startup after quitting Microsoft in the .com boom in 2000, which I did for about 8-9 years. We did software for the top S&P 500, like we had 60% of the S&P 500 as customers. And so after that, I really actually quit. I wasn't going to work anymore. I even had a get together. I said, and I had a goal saying, before 40, I have to retire. And I did retire, by the way, but unfortunately, it was short-lived. It was for a couple of years. And but the 2 years, I spent a lot of time, around wellness, around discovering myself, meditation, everything. And, I really got very passionate about the whole space of helping people to be fully aware of their full potential of being, fully present to their life, and how can they do better and how can they do more. And I think I just felt like, hey, I did well in my life without knowing all this. What would people do if they knew all this? So, I got passionate and I started a whole chain of gym, spa, salon, integrated kind of stuff. And it was truly out of the passion of saying, I really want to see how can I help people, arrive in terms of well-being and wellness and awareness kind of stuff. And, though we started this business called Latitudes, which is in India, actually, in those days, we had about 7 outlets. Eventually I realized I wasn't into running a consumer business. It was a successful business. We did well, but I realized there's a whole problem with running the business in terms of software and how to manage the business. And I realized there was no good solution. And one thing led to another. I had a bunch of people from my past. When I said I want to explore starting this, there were just too many people willing to work with me. And that led me to say, maybe I should start this company, which is Zenoti.
So your understanding of the customers early on came from running your own spa then, Sudhir, or did you talk to others also before you started?
No, it actually came from a lot from running my own spa, because of course I went and met other businesses because it was new to me. I even met with large businesses in the US, like, Anytime Fitness, and understand how they do, what their challenges are, and build some relationships in the ecosystem. But it largely came from my own ecosystem of awareness of saying, I've spent time, managing personal trainers, being a reception. I've actually sat at a reception desk, taken calls, and run an entire reception desk. And trust me, running a busy spa reception desk, if anybody here thinks they're very smart, it is not easy. I found out because my staff used to say, hey, one person isn't enough. We need 3 people. And I was like, why do you need 3 people? It's just answering the phone. And I learned the hard way how hard it was. And it used to be a very busy day. If I sat down at the reception, I would just be exhausted by the end of the day. And I realized there's a lot of work to be done in the software area.
So some groundings of early happened there. So quickly, Sudhir, now switching to software, I'm assuming obviously when you started, you didn't do this TAM analysis, how big the market could be, where all it could be. So you're a passionate entrepreneur. You wanted to solve the software, which most of the entrepreneurs are. Did you think about how big this can become or how the big market could be when you started? Or you said, okay, let me start. This is passionate. We'll see where it goes.
I think it is more passion. I
Yeah.
really didn't think how big it'll become. Nothing. I had no agenda of saying I need a big, large outcome. Nothing. I just felt I was super passionate about saying, okay, I love this space, but then my expertise in software. So why don't I go and build software for this space rather than try to run businesses in this space so I can help the larger ecosystem? And that's kind of how I felt like, I
Yeah.
really need to go do this. Yeah.
So early on, you said, okay, so we started. Now people nowadays are very nuanced. Our founders are all saying, day one, I want to go to US or Europe. I know, ignore India customers. But you chose to say, I will build for India first. But you also choose a different type of customers in India. So help us understand. There was some thought process going instead of picking the top, whoever come to you first, whoever you can sell to. You were thoughtful. Give us kind of the early days of first few months of thinking, whom do you want to partner and so on, because there was a very thoughtful thinking on your part. It'll be good for
Yeah.
people to understand that. Yeah.
Yeah. So, see, fundamentally, I came from an enterprise software background. So, I built software for running a large business because that's what I was trying to do. Though there were only 7 stores, these were very busy stores with a lot of moving parts. So, we were inherently, we ended up building a software which thought about the big picture. What if I was running a 100-store business? And, I really didn't find a solution out there. When I was a 7-store guy and I was trying to find software to run my business, there was nothing out there. Literally, I really mean it. There was only software to run a single store. There was nothing to run a chain kind of stuff. So that led me to really focus on that. And our, of course, innate nature and tendency resulted in us building very enterprise-oriented software kind of stuff, which is focused on larger businesses, Shaker. So when we started day one, I don't think we were interested even in saying some small store is going to use us. So what's the big deal if some small store uses us? We really wanted the big guys to say, that's when we know we are making a dent in the market kind of stuff. So that was one focus. And the second you referenced about India, I honestly I moved back from the US to India. I spent a lot of time in the US. And honestly, of course, I could have chosen to live in the US. But I never lived in India. I graduated from IIT. I left as a student. I never actually lived as a human being, paying my bills and everything. And I wanted to live in India, and I was very passionate. And so when I started this company, I said, no, I'm going to sell in India. I'm going to solve the problem for these businesses in India. I think it is more from a passion perspective that I think I can solve this kind of stuff.
So your core competency was in enterprise software. So you picked slightly larger customers, but it takes a slightly longer time. So I remember you picking some few early customers. How did you convince them that they should pick you? Because when you have no software, nothing else, that's one biggest question every founder asks: is how do you convince a large guy to trust you?
Yeah, so that's a very good question. See, in India, for example, when we started selling software, it took us almost 2 years to get our entire suite developed because we were just developing a very comprehensive solution. But when we went to market, it's very easy to go to a lot of people. There are a lot of big brands. You can go to, today, for example, in the industry, you have, people like Bodycraft, which is a mid-sized business. You have Lakme, which is a massive business, and Naturals, which is even bigger. We really were trying to understand the industry and say, who would listen to us, and we went to trade shows, we went to events, and we really realized people who are very passionate about their business, led by founders of their business, are the ones who would be most willing to listen to our pitch. And so, one of our, while we had multiple people who really were early stage customers, one of our flagship customers very early in the game was Enrich Spa and Salon. And Enrich was like, they were led by the founders. They were willing to experiment. They were willing to try stuff. And that's where I realized, you know what? You're better off selling to people who are still headed by the founders. If I wanted to sell to, let's say, the Leela spas, or or the any of the large hotel spas, or Lakme, which is owned by Hindustan Unilever. It's going to take forever, but whereas focusing on the businesses which are passionately owned by the founders who are willing to experiment and try, is where I realized, these people will listen to value proposition and willing to work with us.
So the insight there, Sudhir, is I think you landed on something very useful and insightful, in the sense that when you sell to a large company, if there are consensus-based decision making, several people on the other side, where you're saying like Leela's or Lakme's, less likely they will pick a startup, because they will be worried about, doesn't matter how good your solution is, they will be worried about whether it will work or not. Whereas a single decision maker, where there's an authoritative decision maker, where you can appeal to that person, you commit and you convince, more likely you can convince. So that is what some of the word we use in the industry is called co-creation. If you can find these kind of co-creation partners early on, who will push you and create a really high quality product, and I think that gets you, a momentum going, and you also teach you how to build that product, right?
Yes,
So,
absolutely. And I think largely we ended up co-creating a lot of what we do for the Indian market with Enrich, because I think they basically believed in the fact that, hey, these guys get it. They think about the problem the right way. They have a core solution. We didn't necessarily have the entire solution that Enrich needed. But the thing is, we had the right thought process and we understood their business, and they were willing to work with us, even though there were small gaps. So we actually worked with them to co-create everything. And I think a lot of our story is around finding such amazing people who are willing to work with us to help us continue to co-create our software.
In fact, if you look at the history of a lot of companies which have been massively successful, finding your first 10 customers drive the direction of the company. And if you choose those 10 customers really well, where you have to choose, not randomly picking any first 10 customers coming at you, they will help you shape the future and DNA of the product and the company. I think that is a very useful insight. Sudhir, one thing is, you were doing the spa software, and somehow you got into salon also in India, I guess, early on. Was it because there's always, we hear about focus, hey, just do one thing really well, why you want to go and do other products. But any early thoughts of why you went after salon as well?
Yeah, I think, I was actually more passionate about Shekhar for the spa segment, because at Latitudes and Zenoti, the business I ran, we ran probably the best spa in the country. And even to this day, the best spa. We were super passionate about it. And so we in fact called our company, for those who don't know, our company was called Manage My Spa for the first 4 years of our life, So I was so passionate about spa that I said, you know what, we're going to call ourselves Manage My Spa so that our customers know that we are about helping spas to manage their business. And our employees know that our only mission is to help spas. So we were narrow-minded. We just said, look, we don't care about anyone else. We are only going to focus on spas kind of stuff. But as we started to mature a little bit, one of the big things, Shekhar, was that we realized, hey, salons is the bigger market. There are more salons than spas. It's passion aside if you want to do your business. So that's when we kind of expanded into salons. And also, of course, there were some nuances we had to change in our software and around the salons. But that's kind of what it led to us to get to the salon market.
So kind of you moved from one product to two products, kind of somewhat proved in India. Then I think in your journey, you said now, hey, we need to go outside India. And as usual, again, a lot of our companies tend to go US first. But you said, let me go to Southeast Asia. So you chose Southeast Asia or Middle East. I'm not sure which one you picked first. Any thoughts there? Was it like cost of experimentation, or how did you choose why go there?
Yeah. So I think, firstly, we were one of the rare companies, by the way, where we spent a lot of time in India. Most large brands and customers in India ended up using Zenoti. We actually had a meaningful business in India. If we wanted to grow the business in India, we could have continued to grow it, because all the top tier brands knew about us and were using us in some fashion or other. And so that was good. But as we expanded, I think, we really wanted to stick closer to India because from a time zone perspective, it's easier to have support. It's no changes. You don't need to work late night hours and all that stuff. So Southeast Asia and Middle East were the logical things. And what we did was, I spent more time in the Middle East, and one of the other founders spent time more in Southeast Asia. He actually moved, to Southeast Asia and started focusing on that market. And while I didn't move to Middle East, but from India to Middle East wasn't a far distance. And so, those are the two markets we focused on. Simply because of the proximity to India and ease of doing business without making much changes to our core business process or employees kind of stuff. And so that worked out well in the sense it added to our revenue fairly quickly.
Any early thoughts on how to do Southeast Asia? I think you hired somebody there from the industry, or how did you, or you travel from Hyderabad to build that business?
My take on a lot of these things, I don't know about others, but our experience is if you want to enter into a totally radically new market, like Southeast Asia is a different culture, different market, and Middle East is a completely different culture, different market, then the founders have to get involved. So it's like, if I don't go to Middle East and make the first few sales happen, nobody else is going to do that. And similarly, one of the other founders went to Southeast Asia and made that. I think after you get the first few sales to happen, and if you crack the market, I think it's easier to say, let's go hire a few people and build a business, and it becomes a lot easier. But both these markets, I can tell you, we had, it was founder-led in terms of saying we are going to go and make it our priority.
So the one insight there you're saying is any new market, instead of outsourcing the sales, first few sales, just like in India, has to be done by founders in a new market. Once you have some success in that market, then bring the salespeople in that market to go after. But I guess you knew your target customers really well because of the nature of the business. You know who you can target and find out who they are as well, right?
Yes. So yes, absolutely. I'm a firm believer that, the founders have to go into new markets themselves kind of stuff. And to talk to your point about knowing who your customers are. In fact, I wrote an article on LinkedIn, which was like, choose your customers, don't let them choose you. And it was so true about us, in the sense that, we actually made lists saying, these are the customers we want to focus on and nothing outside of this universe. And even to this day, by the way, though we are big, actually our lead gen team has a list of customers by city. And this is the customers we will talk to. If anybody else outside of this customers calls us, we actually tell them, look, we unfortunately didn't design this software for you. We are not the right solution for you kind of stuff. So we are super passionate about being super clear, saying we are only designed for customers who meet our criteria. And if they don't meet our criteria, then, it's unfortunate. And honestly, that has served us well in the sense that, we have much better churn rates. We have a very stable customer base because we are choosing customers who we know will benefit from our software. They are not going to churn. They're not going to leave us that easily, basically.
Yeah, yes, that's actually very useful in terms of the how well. And this also because of CRM/ERP style product, your churn will be very low. Only churn is when customers have kind of die, or that's the only way. Otherwise, once they're integrated, they have to live with you for a long time.
Yes.
Switching gear a little bit, then salon spa is a big enough market. Then you got into MediSpa. I think many people may not know MediSpa in Australia. Some customers, early customers in Australia, started pushing that. And I remember early on you saying that the margins are phenomenal there, big enough market, completely underserved, may not be big. Now help us understand, because these are the choices founders receive every day. Should I sell more to my existing business, existing market, or choose a new market which is very lucrative, nobody is there? How did you choose that one, say that let me go and do it? Because now you have to do engineering, you have to do product changes a little bit to support them.
Yeah, so to a large extent, Shekhar, it has to do with the fact that, we ran into opportunities in MedSpa. Then we had to evaluate saying, hey, this is interesting. There seems like nobody else who's solving this problem effectively. Obviously, that's why these people are calling us. And, but there were additional requirements. MedSpas require, like digital forms, and they take pictures of people and all kinds of stuff in terms of tracking the work they're doing. But as you said, they're very profitable businesses, willing to pay a higher MRR than even what we are charging kind of stuff. And so, but at the end of the day, it was still focused on multi-outlet, large businesses in MediSpa, which, where we have an edge in the sense there's no way anybody's going to catch up in terms of our ability to serve the market. So we felt that seemed like a logical expansion. And as you said, Australia, New Zealand is where we ran into some opportunities. I mean, at the end of the day, you as you're working in the market, you do run into things, and you have to assess each of them. And this turned out to be an interesting one. And I think it's still serving us very well, because more recently we are seeing MediSpa is the booming part of the ecosystem, where there is not as many salons growing, but there's a lot of MediSpas growing globally kind of stuff today.
So Sudhir, on the concept of these salons, spas, MediSpas, I think early on you were saying about, one is the enterprise customers, but you always talk about the experience of the consumers walking in and how your software has to help. I think that was there when we met first time. I remember vividly you talking about that, because very rarely our software companies talk about their customer, enterprise customers, but not whom they serve. But you were one step ahead of them. Maybe a quick update on why you felt that is what is going to give you an edge over time, because that is like positioning of the company, your ethos, your DNA, and everything revolved around that part.
Yeah. So see, honestly, when I started this company, as I told you earlier, I'm a firm believer. The reason I got into the whole wellness space was, when you help people feel good, they go on to do well in life. In the sense, every person has a certain potential to achieve certain capabilities in their life. That potential isn't because I'm going to sit and lecture them and tell them how they need to do. It's only about making the person feel good. When someone is in their zone, they tend to outperform and they tend to find their own capability, whether it's as a parent or whether it's as a business person. So I was very passionate about that space, right? And overall, kind of saying that's what I believe in kind of stuff. And, so this whole notion of when you feel good, you'll find your greatness was a core thesis that we started with overall as a company kind of stuff. And, I think that has been the guiding principle for us in terms of focusing on wellness and why to prioritize wellness overall for ourselves in the industry. Yeah.
Got it. So Sudhir, you had a kind of a good product or a great product. I don't know where would you classify in India, Southeast Asia, Australia. Then you said, I'm going to go to US market. I think you also had a funding from Axel at that time, so plus some more money. So you said, okay, let me go. That's a tough one in sense because no referenceable customers in the US, and very customers are savvy to buy very sophisticated tools. And how did you go and convince them that they should give a shot at your product? And also, I think at that time, Booker and MindBody were kind of ahead of you already. They were there in the market. I'm not sure what was the competitive spirit was in the US market. Yeah. Because this is a constant question everybody has in general. How do you penetrate a market which is where you are unknown, but there are some known players?
Yeah, so you're right. There were very well-funded players in the ecosystem in the US when we came here. And before we get into the space of coming here, I just want to share with the audience, by the way, I had done a company before, which is SumTotal, which did the whole India, US, global market, supporting customers in the US from India, time zone, night shifts. I had done the whole thing for about 8 years. And, I actually told myself, this time with Zenoti, I don't want to do that, But when Shekhar and Axel showed up, to learn about Zenoti, and we talked to them, we were happy doing what we were doing. We were India, Middle East, Southeast Asia, and going into Australia, New Zealand, and all that stuff. But Shekhar was the convincing factor in saying, look, you can do what you're doing right now, but how big of a company are you going to build? And we were not looking for funding at the time. And we realized, look, if you really want to build a large outcome, the US is the holy mecca, And so, I can tell you, any startup person who's there, eventually, if you want a big outcome, you have to have the US as a target market. You can do a lot of experimentation and learning in India, but the US is the place where you can build a large outcome. So it was a choice we had to make. Are we going after a large outcome, or are we happy with building a meaningful business in India and, in the regions which are within 4 hours of our time zone kind of stuff, right? So once we decided and we committed to going to the US, so I actually came to the US and I would go, to a few salons and spas. We had a couple of other employees of mine who came along with, us, and 3 of us used to go visit a bunch of salons and spas and try to do lead gen work to see if they would listen to us, And we realized like it was very hard. We were naive about trying to convince these people because remember, selling large enterprise software is very different than selling to these small shops kind of stuff. And then, then I said time out, literally, we actually went into we picked some larger businesses because I felt like, look, we know how to speak to large CIOs and CTOs. And we went into the salons and spas. We actually got services. We talked to people. We understood what were their pain points. We tried to talk to the manager, the person doing the treatment. And, honestly, I actually did a lot of groundwork between me and there was another person, Bomshi, who joined us within Seattle. He was bald, but yet he would go with me to every place. He would get vaccine services. He would do whatever it took, but he would learn, talk to the employees and figure out what is their problem. And, after we figured out after about, I would say about 30 days, really learning about the market, then we reset and I sent out 5 emails to 5 key CEOs and said, who were running businesses who were between 50 to 100 stores and said, here's what I think your problems are and here's how Zenoti solves them. And I can tell, I was amazed honestly, by the way, out of 5, 3 of them replied to me. And, one of them closed in 15 days, they signed up our software. So I think what I learned was if you do the research, if you understand their pain points and you send a mail which is so focused on their pain points, you will get a response, basically. A generic mail trying to say, oh, Zenoti does this, doesn't, they don't care, kind of stuff.
So the work you put on that part, I remember you said, you said that email was no more than 5 lines.
Yes.
Basically, the CEO of the other company and you are at the exact same wavelength of the problem statement. Even I didn't understand what that email was saying really well, but you were saying that the CEO will understand and they will call. And so that 5-line email that you've sent to the CEOs to get them back to you, at least to get the call going so that, they engage with you, was that 1 month of insight. So there is no shortcut to understand the pain points of customers, especially when you're going into a new market, I guess.
Agreed. And just so you know, one of the CEOs called me 5 minutes of sending the email and I didn't even expect it. The guy was like, how do you know my problems so well? So I think there's no replacement to research and understanding your target customer.
Very good. So quickly on that competition, so Booker was there, MindBody was there. Obviously, there are different market segments. They were not pervasive yet, but also a lot of entrenched desktop products. How do you convince them, saying, because this is like go, don't go situation for many of them. Once they go in with you, they can't go back. How do you convince many of them? Now it is becoming easy because now you have enough referenceable customers, maybe first few customers, 3, 4, 5 customers. Once you had these calls coming back, what was the way you converted them into a customer?
See, so first thing is the fact that we actually ran large businesses in the US and Middle East and Southeast Asia was relevant in establishing credibility that our software works. It actually does operate. There is a cloud instance. It's working. You can see these large businesses, and I actually had them wanted to call the customers in India and get their referenceability, etc., kind of stuff. That's one important thing. And the second thing is, luckily for us, nobody in the industry was solving the problem of these businesses, whether it's MindBody, Booker, who are well funded. Because see, solving an enterprise scale problem in a narrow industry, which is like salon, spa, not many people are willing to invest the time and money in it. I happened to show up accidentally because I was passionate about, the whole well-being space, and I learned so much about it. And I said, but who else is going to show up? So there was nobody who, even MindBody and Booker, didn't have the assets or the talent capability to deliver that caliber of enterprise software. And being from India, we had this huge advantage that we have a big team developing software out of India, and India has this challenge inherently of doing, large enterprise software is something we have built capabilities around. So I think we just had this cost advantage, know-how about the space, and really appealing to the enterprise space, and the willingness to invest exclusively in the enterprise space that served us well at those days.
Very good, Sudhir. So I think we have maybe another 5-7 minutes before we get to Q&A. Payments. This is something we've been discussing. Finally, you introduced, this is one of the fastest growing thing, because it's always a confusion for a software company to say, should I go to payments and should I support payments? Maybe for this audience, because I'm seeing that as a playbook for a lot of software companies nowadays to introduce additional revenue streams. Why don't you talk about how you got into the payments and how it was done before versus with you, and why that is so critical?
Yeah, and I think that's, by the way, for everybody's thing, today, Zenoti has about 30% of our revenues come from payment processing, which means when somebody swipes a card in a salon or a spa, we make about 0.4, 0.5% margin on that, basically. And so it's like, we never were doing, of course, we were not doing that before. And, the last 3-4 years, we decided, maybe we should explore this. I don't know if I really understood the implication of it fully in terms of the impact it will have on it. But I felt, this seems like low-hanging fruit. It shouldn't be that hard to do this kind of stuff. And we invested heavily in the payments area. We did struggle. I'm not going to say that, we were out of the gate hit, by the way. Our first payment solution was, we ended up with a disaster because some things didn't work. A couple of our largest brands who tried our payment solution were really upset with me, and I had to show up at their door and talk to their CEO and make them realize that, look, our software works beautifully. We have a problem with our payment processing partner, and we're going to address it. And they gave us a chance to do it, kind of stuff. But that has been a huge game changer. If today I had not invested on that day on payment processing, whatever you hear in the news around, valuations of Zenoti and all that wouldn't happen, because we would be like 30% of our revenue being not existent. We would be that much smaller as a company, kind of stuff. And it was just literally free revenue on the table. Like, people sign up for Zenoti. If you take Zenoti payments, we make more money. And it's, I think today, if you're doing a startup in any kind of a vertical space or any space where there's an opportunity to do payments, I would say, the platforms like Stripe, Audion, they've made it super easy for you to build amazing integrated solutions for payment processing. So that's been, I still think our company's long-term strategy, we are going to end up with a lot more dependence on payments as a big revenue stream for us.
So Sudhir, on that note, there are a set of questions. We'll switch to a few of the questions, and please post other questions as people have it. The first one is online versus offline sales. You're doing sales, and also during COVID, how are you doing these kind of activities? And have you seen any change? And online, do you get large customers, or you still have to talk to them? Yeah.
So firstly, I should say, by the way, we actually know by city, whether it's in the US, whether it's in the UK, or in the Australia, New Zealand, or India, we know who are the customers we want as our customers, who are the brands we want as our customers. And we literally focus on them. So it's not about going, we have never, you may be surprised, we don't do any online ads. We don't do any spend on advertising of any nature, because there's no point. I know exactly who I want as my customers. So we just focus on those people, kind of stuff. And so our advertising, our lead gen strategy is based on targeting those accounts by email, by outbound calls, by sending them direct mails, by sending them some message or package which gets their attention, etc. But it's not by, if I turn on Google Ads, for example, we end up with more than 90% of the leads will be discarded by us, by our company. And we do have a discipline as a company, not because I say so, because the entire company is built around dealing with larger customers. So if some small guy shows up at the door, a sales guy is not going to be able to make that sale happen, because the implementation guy is going to say, get out of here. So, we just have a very strong culture of saying, this is our customers, and that's what we focus on. But it's not been as much around online ads. But things like SEO are important because you do want to be known and be aware. So when the large guys do search, they can find you kind of stuff.
But I do see, Sudhir, when you focus on large, sometimes you pick like 3 chain premium brands. And these are people who influence. Maybe talk about that strategy you have used, because I remember you signing up customers who charge haircut like $250 to $500 haircuts. And you say, if I get them, Shaker, the rest of the haircut guys will say this, if they are using, I should use. It's not like single centers, but premium assembly, like it's targeted. You had like strategy of whom do you want on that? Yeah.
So good point. So when we started in the US, we actually started spa, just like we started in India with spa. In the US, it was massage guides and massage green and spas. But when it came to salons, honestly, there are, we picked the most complex business in the US. But you may think this most complex business is a large brand, but it wasn't. It was like they only have 10 stores, but each store is like insane. It's like they have 200 employees in each store. A haircut, as Shaker put, is $200 to get a haircut inside the store. And the complexity of supporting the store was insane, like in terms of how many moving parts are there. And there was this book which stood out in my mind called Crossing the Chasm, where the Crossing the Chasm book, the author says, there was this company called Documentum, which focused on one company as their target customer, just one. They said, I only want to sell to one. I don't want to sell to anyone else, right? So in that spirit, I was like, okay, if we can win this brand called Mario Tricocci, which does $1 million a month in every store, then I feel like, hey, no matter which business it is in the US, I can support them. And it did work out. I mean, of course, it took some time to win the account. And that's where I feel like, a lot of Zenoti paid a lot of price early days in investing in technology and building the right stuff rather than focusing on growth and aspects of that. But today we are benefiting from some of that because the choice of choosing to say, I will focus on Mario Tricocci, I will win this business, really paid off for us. Because today, every leading city, all the top luxury salons use Zenoti. And I do think it started with the credit to having Mario Tricocci, which was the #1 luxury salon in the country, as a customer of Zenoti.
Okay, so there was a very early question on the TAM. I know as you continued on, you expanded the TAM by different products like payments and salon spa, medi spas, then regions, then also going after large and extra, like a really large customer. Some of your customers have 1,000 locations, right? So like a crazy amount of customers. And the average revenue per year is like in 7 figures. One question, then in the recently you started to say about, I also will go after the single centers now. Help us understand, most of the people usually go single center first, then mid-market, then enterprise, then large. You are coming in the opposite direction.
Yes.
What is your early thoughts? I know it's just starting out. Yeah.
Yeah. So it's a unique proposition. I almost feel like everything we did so far, like we recently took stock after our last series round funding, where we have just too much money, then we can actually invest and do. It's like we were taking stock of saying, where can we go as a company, right? So we realized, look, as a company, we can, get to 200 million, 300 million. We can be ready for IPO. We can do that. We're doing what we're doing well right now. There's no problem with it, right? But if you want to be $1 billion company, what does that mean, kind of stuff, right? In terms of $1 billion revenue company, right? And we really felt, look, you can't get there without doing the single center story. And because a large part of the market is, in the smaller businesses, though the healthier part of the business is the top end of the business. And, so we had to make a choice saying, should we do this or not? And we deliberated on it quite extensively, kind of stuff. And it requires a complete ecosystem change within our company to say, we will aspire for this, we'll focus on this kind of stuff. And today I can say one of the things is, one of our consultants who works with me very closely and I have a lot of regard for, he says, everything you did, Sudeep, is basically, it's like a test you're taking for the real actual, game you're going to play. All this is a trial, is a test. The real game is the single center game, because that makes you $1 billion company kind of stuff. And the ability to solve the big problem, having the leading customers in every city as your as your leading branch as our customers, really lends us a lot of strength to go downstream. It is rare that companies come from the top downstream, and I'm very optimistic about what we can do as we go downstream in that. But it's the right time, I think, for us to choose that. And we are seeing some of the benefits of some of the investments and choices we made early on. As I would try to put, we made choices which were hard choices. We solved the hard problem first. I could have solved the easy problem. Easy problem is solve the single center problem. It's very easy to sell to single stores. They don't want much. They'll sign up for your software in a heartbeat, but they'll also leave you in a heartbeat kind of stuff. But today, after having made all the hard choices in the past, I think we are looking at some interesting times ahead for ourselves.
So question on the, I think you're going for enterprise. Some of these enterprises have their own differences in product and usage because it's an old industry. How critical, maybe talk about product positioning and also internal to engineering. How did you guys architect such a way that it can help? Because you're going and selling ahead of the product being ready also in terms of like Medispa, in terms of payments and so on. Just what was the strategy you used?
Yeah, I think it's largely about seeing even to this day, Zenoti has one instance of our software online. We don't have a separate instance for salon, separate for spa. We don't have a separate instance for Mario Tricoci, nothing. We have one instance. We have always stuck to this discipline, in the last 10 years, saying we will never create a custom version of Zenoti. And I would urge everybody to stick to that principle. It is so important and so core to your business kind of stuff. But at the same time, we have made sure there's a lot of configurability in Zenoti. You can always, choose to say, configure it for different types of businesses. There are membership businesses, non-membership businesses, barbershops, or, resort spas, which work in a different way in terms of spas inside a hotel. So we've always been big believers in making sure that the software is configurable to various niche segments inside our industry. And while all of you from outside in look at it and say, hey, this is such a narrow space. What is the big deal? Why are you doing all this? We look at our industry and we say, oh, this has 20 different industries inside it. And we try to understand each one of them and make our software super configurable all along the way. I think configurability is very important for you to address all the niches within the space.
So quickly, so this to get back to some SaaS metrics, and I think this is a natural advantage you have seen. So that let me summarize from my point of view why some of the things you've chosen has helped you significantly. The first metric that drives, obviously, your CAC, LTV, everybody understands in this call, they all know about it. In your case, it's not crazy number of salespeople because each sale is a massive number. So you actually very less number of salespeople even today you have. So CAC, is not a challenge at all. And secondly, LTV is not a challenge for you, lifetime value of the customer, because once they're in, it's very hard to get them in, but once they're in, it's very hard for them to lose. Like your churn is, like at enterprise level churn is very, very, very low actually. But the more fundamental thing is the location. So your pricing model is based on per location for this large customer. And once you have, say, these customers who have like, say, 50, they themselves are growing. When they grow from 50 to 60, 60 to 70, 70 to 80, naturally your revenue expansion is happening. So that is one powerful lever that you have. And the pricing based on not just enterprise grade, independent of location versus specific to per location. Then again, you also have sub products, right? Like, smart marketing and many sub products together. That's all coming together. The second one I want to talk about is the payment. Payment, your CAC is almost zero, right? You have spent very little money. You're getting an additional 30% revenue from these things. So these two are actually helping you scale faster, along with the 120% plus net expansion, which is top class in any SaaS companies. And that thinking Obviously you landed on right things at the right place. But if somebody is starting out a company now, I would think about some of these angles of how to position in such a way that your net expansion is in your favor, and also churn. Because only these two things make the company struggle a lot over a long period of time. When you cross this 10, 20 million ARR to go to 50 to 100 to 200, churn is the biggest one, and then the net expansion. If these two are right, then you can continue to scale. Okay, so just two more minutes. Is there any last words for people who are thinking about starting with India, solving in India first, going global versus going straight to global? Any thoughts?
I would say that, see, if you're starting in India, the one thing is we have this amazing talent in India who understands what it means to build, software for the global world, etc. But solve the problem within India first. Like I feel one of my blessings was I had so many customers in India. Before I left India in terms of going to the global marketplace. And India is, I think, a little more forgiving. Relative to the US in terms of when things go wrong, when there's bugs, when your site happens to be down for an hour or something like that, you can learn everything you want to learn in India. Because in India, some of this is all relationship driven, and they're not going to kick you out just because of the first error you make kind of stuff. And I think so. Our blessing was we had a fairly mature product where we had learned all the cloud ops and the availability aspect and the scalability aspect while working in India before we showed up in the US. So our focus when we came to the US was understand these big guys' business model, understand that their business is very different, their problems are very different, and address those. And we didn't have to worry about, okay, is our software working? Is it scaling? Is it running on the back end? If I had to do both at the same time, it would be a little challenging, of course. And so I think tackling the India market a little bit, whoever you are, wherever you're starting company, and having a bunch of customers and knowing that these customers are happy is a good starting point before you venture off outside India.
Okay, cool. So to summarize, pick your first 10 customers that you are really feel good about, that you can build on top of them. It doesn't matter whether in India or anywhere else. Then you chose the path of, let me use the same product, same sales model, same thing in Southeast Asia and get more revenue before I go outside, because you do need money to go to the US, and especially if you want to do field sales force. The third one is multi-product. Very early on thought of multi-product. You will not do single product, it is multiple product to multiple regions, which is again, US, India, Europe, Australia. Then you also choose the path of multiple customer segments, in the sense very large customers versus large customers. So it's like a 9x9 matrix, and this is the judicious choice you made throughout to build towards this. Then lastly, you also kind of talked about how when you go to a new market, be like the best team, be there and understand the pain points to the level, versus don't pitch just product, pitch the pain point and how you understand, so that the customer resonates with you. And once they resonate with you, there is a higher chance of conversion. The fortunate thing for you has been that there's not like a crowded market in the sense of number of other players, like 30 of them, and you're fighting one of the 30. Obviously, there were a lot of desktop products, legacy products. There were few competitions, so that was beneficial. So people have to take into consideration that context when they design their own approach. So dear, congratulations again for this phenomenal success and growth so far, and all the best in the future from the whole SaaSBOOMi team here. Thanks for taking time late in the night for you, Friday night that too, to talk to us.
Yeah, thank you. I'm happy to be here. I've always enjoyed being part of SaaSBOOMi, and I realized early days I wasn't, but I realized how passionate the people who run SaaSBOOMi are. And I wish this was in person. And but yeah, I'm glad they're managing to make this collaboration and networking happen virtually.
Thank you. Back to you, Satya.
Thank you. Thank you so much, Sudhir and Shekhar, for that session that just organically, slowly became so deep, and it was a wonderful session. some really powerful ideas to think over from a unique story, starting with India, Middle East, and Southeast Asia, and then going to the US, starting with big chains, and then going to single stores. Such a unique story founded in passion. Before we go over to our next session on Browserstack's growth story, Browserstack just recently turned unicorn as well. We'll just take a quick 5-minute break. So feel free to go get a cup of coffee or any other beverage of choice, and we'll meet very soon. Thank you. Thank you very much.
In the company. And Browserstack is one of my favorite companies. Of course, you're a great friend, but I've really loved your journey so far. How do you started? For the audience who do not know much about journey of Browserstack, it was a bootstrap company for a very long time, really doing well, growing like a VC funded company. And then Ritesh decided to take capital and grow it even further. Ritesh is going to walk us through the journey. So welcome, Ritesh. For starters, why didn't you start with the introduction of Browserstack, what it does, what the company about? I think it'll be good for people to understand, hear from you what Browserstack is all about.
Sure. Thanks, Manav, for inviting me in and for your kind words. I think I just happen to be now known for a unicorn, being the CEO, co-founder of Browserstack. But what really I am is it's probably an entrepreneur, a problem solver, a thinker, an engineer, a scientist, and of course reserved and non-social. That's probably how I like about going about describing myself. And at this point in time, I happen to be the CEO, co-founder of Browserstack. What we really do in Browserstack is we help developers build applications that works across millions of different permutation combinations of consumer devices and platforms out there. So whether it's a website or it's a mobile application, or maybe in the future, we're going to probably see like probably an upward trend of smart TVs, watches. So we help developers to make their apps compatible across all these different platforms.
Thanks, Ritesh. So if you were to go back into your journey, and a lot of our audience here today are startups, some people have just been in the very early stages of starting up, some have crossed their 1 million mark, and some are towards growth beyond $5 million. I think it'll be really important to understand, you are not coming from a traditional background, and a lot of you're coming from IIT Bombay like you did. A lot of a lot of founders coming out of engineering colleges, they latched onto the first idea. And so how did you go about choosing this field? This is kind of esoteric field, right? It doesn't really strike you naturally. It's not that you've gone through a pain point and you started something. So it'll be good to understand how did you go about deciding on which ideas to focus on? What was that thought process like?
Yeah, sure. So I think we also started our journey like typical to any other founder. I think we went for a lot of hot ideas in the market. But I think we had our own journey. We probably went through about 25 ideas in a span of 7 years. Almost all of them failed and nothing scaled up. And we probably learned that it's not the ideas, it's the problem that we solve that makes a difference. So just sharing my own experience of Browserstack. So we were building a consulting website. And my co-founder Nakul put together a WordPress theme up and running in probably about 2 days. He handed over to me, hey, go and probably take it to the customers, get more business. And all our existing customers happen to be from the Microsoft background. So making sure our kind of website is compatible to the Internet Explorer browser back then, it doesn't exist anymore, probably was an important priority. And it would have taken us days to even find the browser because we were always on a MacBook. So we probably faced this problem ourselves. And then we kind of recall that we have faced these problems in many times in our past experiences when we were making web application. So I think we happen to identify a problem that we faced in our kind of day-to-day life. And that was the starting point for me.
Okay. And so the early failures didn't deter you. You said you tried a lot of ideas. It was very easy for you to get a job. So what really kept you going? Okay, let me try another one.
I think initially it does, but after a point you get used to it. I think it's the will one needs to have. You just need to keep pushing hard against the wall. At one fine day it breaks. And the only thing you can do is probably learn faster and iterate faster.
I think the underlying question was, how do you decide when to decide a failure and move on? I think a lot of times our tendency is to be optimistic, and that does work out in many situations as well, right? That when you say, okay, fine, let me continue for another year, another 3 months, and suddenly the market changes, or you get better idea, and some companies do grow like that as well. So how did you go about deciding, okay, when to say, okay, fine, this idea is not working, let me go to the next one, and then go to the next one?
So Manav, we went through the same thing. I think the first few ideas, we did spend about a year and a half, 2 years working on them. But I think we just came with a method to the madness. You come with your own method that what does a success looks like. And a reverse of that is probably the success doesn't look like, and it's not going to come. And that's the time to call it off and move on. I think it a lot depends on have we hit the right problem statement in the right market, and are we probably heading in the right direction in solutioning the problem. If we actually, let's say after 6 months or 9 months, you'll probably identify either that we're not solving the right problem, the market is not big enough, the market is not there yet. That was my first startup. It was about AI machine learning, that's what we call it. It was all about sentiment analysis and reviews available across the globe. We pitched it to a lot of investors. I remember over 50 investors, not a single of them gave a penny. But what we got as a feedback that the market was not ready yet for that technology in the B2C space. And we still kept trying, but I wish probably we could have probably folded that down like sooner than probably spending about 2 years.
Yeah. So if I have to paraphrase you, a lot of times you get stuck at $1 million or between $1 to $2 million, right? And you have good revenue. Customers are saying yes, the problem is good, but the growth is not coming. So did you experience? How would you advise the audience here or the founders, saying how do they go about deciding now to invest more time, go for funding, or you switch to another idea?
I would say like you probably have take 6 months tops. Go back to the drawing board. Stop doing what you're doing. Think about it again. Put all your learnings in one place. Study probably deeply about the market and identify what's going wrong. Come up with like 2 problems that are doing wrong. You have 6 months to fix it. If it doesn't work out, I would say call off, move on.
Right.
Sticking to it, I think time is precious. Like the more you stick to an idea that's not going to work, it's not going to help.
Yeah, of course. I think in my experience, a lot of time, I think the understanding of market opportunity, not just from the sizing, but the drivers also makes a lot of difference, right? And a lot of time, those waves also carry you through if you hit those waves at the right time, right? So,
yes, that's absolutely right. I think the timing matters. The wave of the market definitely matters. So is the depth of the problem, the size of the market, how many of them are facing this problem actively, what does the competitive landscape looks like? If there are probably about 300 CRMs out there and you want to build another CRM, you probably want to think about it a million times that what's the problem that you are solving that the other 300 haven't identified yet. So yes, Manav, in short, you're right.
Yeah, and the reason I'm focusing on this point is, a lot of time founders have a great choice to even sell their IP and make good money and start the next venture faster. So there are multiple options, and it can be a win for founders in many ways. And there are examples, Freshworks is an example where Girish was not the first 100 help desk company, and Pipedrive is a great example where there were, I think, maybe 100 companies in CRM, yet they listed and had a great exit. So I think the various combinations possible through the journey.
Yeah, absolutely.
So So I think one of the key parameters when you start, obviously, is you start with a team, right? Especially the early team, and they also contribute a lot about how do you go about shaping the company. So what were your few experiences in building the early team together? I would say the first 10 employees.
Yeah, Manav, so before the employees, I think I'll probably speak about the co-founders. So I think I'm blessed to probably have world's best co-founder, as that's what I'll put it. It's our journey is almost 19 years old now, and we met. We were in college, and if I look back, uh, I think it's kind of like a startup is a journey of ups and downs. A lot many more downs than the ups. So you need like a co-founder who'll probably, or a partner who'll probably stay with you during all the hardship. There is, trust in each other, a, probably a lot of commitment to probably making it work during all the hard times, and probably who shares the same ambition as yours, respect for each other. I think that's the building block for a long-term startup.
And in a practical aspect, how do you handle the fights? I'm sure you've seen fight with your partners also in a relationship. So how do you handle the downs, and what really goes beyond when, of course, when things are not going well, right? You tend to blame each other. And things go wrong in a startup, right? Because both of you are starting from a place where you don't know how it's going to pan out. So walk us through some of the experiences, some of the examples we are able to negotiate those through difficult times.
Yeah, I think the fights happen in any relationship. I think there needs to be a mutual respect and trust for each other, and it's fine. I think shit happens. Like move on. Instead of like fighting over it, just spend time into how to solve it. You solve one problem, you move on. You face more problems, just keep solving them. A lot of them are not going to work out. That's what I would advise. Like fights are going to happen. Nakul and I have been through like pretty low times in our relationship as well. But the more you come out of it, the stronger the bond gets.
Was there a point in time where you said, quits, we're not going to work together?
Multiple times, not once.
Then what brought you guys back again?
I think it's the underlying friendship, and kind of, as I said, like it's just sheer like respect for each other, and the friendship of just spending time with each other. Even if we were not working, I think we can just hang out, watch a nice movie, and have fun around it. And if you have to do a startup again, you always think about whom you know and where your best success lies. And we probably knew it's going to be each other.
Right. So I think this is an important point, because a lot of time people are starting from college like you did. You went to college together, so it's easy to find. And you were in a tech-based business or tech developer-led business, so therefore easier. But if you're a founder starting alone from tech college and you want another co-founder, how would you go about it doing differently when you don't know the person from start or from the college days?
I think you need to look for friends whom you know, and if you have, I don't jump into like the first person you met. Hey, this is going to be my co-founder. I think you need to be friends, spend time with them, know them very well. It might take 3 months, 6 months, 9 months. And probably that may be the right time when you're 100% confident. This is the person I would like to be with for the next 10 years.
Got it. And now we move on to how do you build the first 10 employee base, and what went behind building that core?
Yeah, I think interesting journey for us. I think usual suspects, you start with your own network, reach out to everyone. I think everyone said no. And except for one, actually, like he was a senior in IIT Bombay. He joined us and was a geek. He's a geek as well now. He's probably a CTO now, and helped us through the first 6 months of the journey. And then we were looking for like generalist engineers who probably were geeks, could solve any problem given to them. We went to GitHub, we went to the internet, looking out for such people. And to our surprise, like when we messaged them, most of them already knew BrowserStack, and this was like just 6 months of launching BrowserStack. So it got a bit easier to hire really good talent because they already had a lot of appreciation what the problem we were solving. We hired about 3 engineers, all generalists, could probably solve front-end problems to back-end deep operating system problems as well, and a designer who could probably code as well.
Right. And I think if you look at it, Indian ecosystem or the SaaS ecosystem has also matured in between now, right? Over the last 10 years, where when we were starting 10 years back, GTM was not even part of the slide deck, right? Forget about coming in terms of action. But nowadays, as you've seen the learning from various data that is coming around the globe and from India, is that you pretty much has to start thinking about go-to-market as you start thinking about your product as well, right? So would you go about building your team differently now if you were to do that?
I think I'll answer that in 2 parts. I think go-to-market is always important. Even in the early days, we were always thinking about go-to-market, where how can a potential customer can discover you, can try your product, and can probably have a successful purchase. We strongly believed in engineering everything. So our entire experience was like completely self-serve online. There was no human touch at all. And that probably stayed for like almost the first 6 years of Browserstack. And if I have to do it differently, I would probably think about scale in the early days itself. And I think the journey, we probably are in the 10th year of Browserstack, what we have achieved in 10 years, if I have to do it again, I think I would probably challenge myself to get there in less than 4 years.
Wow. So that brings me to the next next segment, which is all important, product market fit, right? So how did you walk us through, because product market fit is kind of a dream or a mirage many times, right? You get some early customers, they give you revenue, you feel very happy as a founding team, and then the repeatability does not come, and you struggle a lot. And that's the primary reason why a lot of companies do struggle between $1 to $2 million. Because you got the revenue, early customer had some problem, they paid you the money to solve that. But the real PMF repeatability, which then take you out of that death valley and make you a 10 million plus ARR company, does not come through.
Yeah. So Manav, I think these days, for any SaaS company to reach $1 million, $2 million is easy. There's just like such a massive explosion of SaaS companies happening and customers' willingness to adopt. So my recommendation would be like, just launch your tool for free. Do not think about monetizing it. You're probably adding a friction, you're adding a headache for yourself, and you're probably not getting the users who will probably use you in a repetitive manner. So repeatability is important. And to get there, you probably want to remove the entire friction from the journey. I would say launch it in beta, launch it for free. Reach out to the users who have this problem. Go find them on the internet. They're everywhere nowadays. Like when we launched Browserstack, we launched it for free. In beta, only 3 features. We were on Twitter scouting for people who were like complaining about IE testing. We were probably reading a lot of articles on the internet who are probably complaining about the browser. We just reached out to them, like who had this problem. And a lot of them really started using our product on a repetitive manner because it was free. I think if we would have read a kind of like a paywall, I think we would have been a different story altogether. So my advice would be launch it for free, get a good repeat users kind of using your product on a daily and a weekly basis. And if that number is growing, is the right time for you to probably start thinking about monetizing.
So, especially in a dev tool market, right? Now, India is also a big development market, the 3rd largest market after the US and I think Europe. So I think the key question is, how do you find out that you got a product market fit? Is it 100,000 developers? Is it 1 million developers? Or is it 20 developers? So how do you go about understanding that dynamics? At what point in time you actually start doubling down and start going deeply into it?
So for us in beta, after beta launch, within a month, we had over 10,000 beta users. I think hundreds of them were using us repeatedly on a daily basis. They were coming back again and again. And few of them were even asking for a paid version of the tool. Now, if I look back, I think the free version was so bad. They probably thought that if we pay for it, we might get a better tool and a better service. I think that was the first time where we think that probably can monetize this. We launched pricing and packaging, and day one we had over 10 paying customers. And within a year, just on its own, completely word of mouth, we grew to $1 million ARR and 1,000 paying customers. I think it was, the 1,000 paying customers, which was growing on its own, I think was the time where we probably kind of realized that we have found something better.
Right. I'm also taking the question, what I'm coming on the chat. So one of the questions from Ashwin is that how did we actually nail down the PLG growth motion in a dev tool market? Obviously, you just said you had 3 features and you launched it, and there was 10,000 developers. Are there any other parameters you look for to how would you go about architecting for PLG motion?
The product-led growth. I think you just want to have the product solve the end developer problem. Nothing should be in between a developer trying out your product. It needs to be the least friction. Developers give you one shot, can within minutes or within hours, they can actually integrate your tool and see success. And are you solving the right problem? You'll get a lot of feedback. I think focus on the feedback. Either the feedback would be, hey, it's the right problem. We need more features. We need better features. I think focus on that. Or if you get a feedback that, hey, look, I don't think so. I have this problem. I think that's an equally important problem. If you get a lot more of that, then probably it's a time to call off.
Right. And this is a related question. Do you think that launch for free will work in a B2B enterprise application space?
I think it should.
Yes, correct. So I can answer that. So it does. So I think there are a lot of companies who are starting this company of TypePad. There are a lot of companies who are starting with freemium model. Freshworks did the same thing in India. Zoho did the same thing. So I think there are many examples like that. I would not say enterprise. We will say when you look at application areas, the market will be mid-market to enterprise. And I think the product-led motion is more focused on the mid-market to small market to start off. So it's a good landing tool. But if you want to grow into enterprise, we're going to go into sales motion. We're going to talk about a little bit more into this discussion. But that was one of the questions I thought it was a good time to ask that. So when you went from a free version to paywall or monetizing, right? So what was a few decisions that you took in pricing? This is one of the questions which is coming here quite often. But how do you decide on the pricing?
Yeah, I think pricing is the least appreciated tool that an entrepreneur has to make their business successful. It's also most of the times a business fails because they don't price it very well. So when we started, our thought process was very naive. Like, what would I pay for it? I was like a freelancer sitting in India. Like, what would I pay for? So we launched it extremely cheap, usage based. You can just pay like $10 a year and be good with it. And after a few months, our kind of like revenue tapered in. We went, and the user base was growing. It's just that how many $10 a year customers can you get? There is a cap on the market. We went back to the drawing board, did a study on the internet, and that is the time we learned there is something known as subscriptions. We were pretty hesitant to launch subscription, but we kind of didn't have a choice, or otherwise we wouldn't have existed. Launch subscription business, subscriptions plan. The day we launched, half of the users actually started opting for subscriptions, and we started growing like some double digit on a weekly basis. And then gradually we kind of removed the entire usage-based pricing and only have as of now subscriptions.
Actually, the key questions, that's an excellent question coming up here is that, especially in a B2B customer, when you landed through developers and you have $10 per developer, when you move to an enterprise contract, or they will want predictability in the pricing model, right? Because they have to look at the budgets and everything at point in time. Yeah. So how do you transition to that journey in the pricing? I know it's a question, but later in the process, but I think last in the pricing section itself.
Yeah, so when a developer starts using your kind of product early on, it can be free, it can be usage, but there needs to be a method that a developer can predict how much usage is that going to be. You need to build that, you need to make it easier. for developer to think through this. And if they can't, it's going to be a huge pricing friction. A company can't make a decision that how much of your product they need. I think we need to make it easier for them. I think.
So give audience an example. How did you go about doing in your case?
In our case, we have calculators, we have tools, we have a lot of education material that when our salespeople talk to a potential customer, we kind of educate them how to think about, because most of the times, 80% of the times, customers would be using a tool like ours for the first time. So it becomes an important thing to educate them into how to think about what is our licensing model, what is the minimum for them to start with, how many test cases they have, what is the current setup of their CI/CD, and so on. So we probably educate them.
Right. And while you were finding the product market fit and you had a great story going on, I thought you turned profitable very early on being bootstrap business, right?
Yeah. So just imagine $1 million in ARR and two of us working out of a coffee shop. And we were very frugal. We have to put money from our pocket. And I'm not sure how many of you probably know that we are actually an infrastructure company. We're kind of like a cloud platform like AWS, but more specialized towards testing. So there is a huge infrastructure cost that we have with the backend. And when we launched Browserstack, we have to probably commit money ourselves. I think we had savings for the last few years, and we kind of committed about $30,000, which needs to last over a year. So we came up with a lot of predictive algorithms to probably reduce our infrastructure cost. So being frugal about it, being wise about spending, I think we became profitable in the first few months itself. And since then, I think the journey continues to be a profitable business.
Right. So now at your stage where you have users, you're making money, very profitable, very big sign for an early stage startup. How did you not go about morphing the roadmap? I have a couple of questions here on the roadmap, right? How do you actually come up with the roadmap? How do you prioritize which features to do? So walk us through the thought process. How do you align that with your growth journey?
So we create our product roadmap on the basis of 3 data sources. The most important one being customer feedback. We listen to like all the customer support feedback. We listen to sales feedback. We listen to all the NPS surveys that we run. So that probably almost is 80% of where the roadmap comes from. Then we look into data and analytics that probably guides us to like what are some problems in the business or on the product side that we are not overlooking. So I would say 10% probably on the data side, and the last 10% can be probably some visionary out of the box thinking ideas from the team that comes in that we probably would like to invest in.
Right. And what was those, how do you negotiate those hard decisions where you have often conflicting interests that comes from the users, right? One user will say, okay, develop this feature. If you look at an enterprise application, they would say, we want an automatic email coming from the software. Other will say, no, we want an API-based integration. So how do you make those trade-offs in the early days when the money is also limited? So what are those 2 or 3, or do you have a framework which you used?
So I think one thing that we strongly follow, we don't let money decide our roadmap. I think there is a very strong culture around it where the roadmap will only be decided by what we think is the best for the customers in long term. So yes, there can be 2 conflicting features. We'll probably say, let's prioritize them. What is priority 1, priority 2, priority 3? We just do a stacking order of it. And then just take the first one, the second one, and the third one. If few customers have to wait, let it be. But the decision needs to be, what is the best feature I need to make, or the best fixing of the problem I need to do, which in long term is the best for most of the customers.
Right. And while so I assume you funded the first few the freemium version of the software in the early days of putting the whole thing. As you said, you were an infrastructure company, so I guess all that was funded by you and your co-founders.
Yes.
Right. And I think the key question is that why did you not take any funding? If you look at it today, nowadays, it's like raining money in the ecosystem, right? So which is good for the ecosystem. A lot of people get funded and a lot of people can take bigger risks. But how do you go about making this one of the most important decisions, which is the funding decision life cycle of the company?
Yeah, so we are a little different from most of the startups out there. I can talk about my story, that why we didn't probably go about raising money. I think we were profitable from the get-go, and even now we continue to be a very profitable business. So we never had a need for raising primary capital, and we have reached a point where we don't see any future need for raising any primary capital. So there wasn't any intrinsic motivation to probably raise money. We just probably a few years back, there was a point in time where Nakul and I were kind of feeling aloof and alone, like, hey, we both have to scale this business now, and we had no idea how to scale a business, not even how to think about it. We had advisors, but advisors can only answer the questions you ask. We wanted partners who have probably seen this journey and have skin in the game. And that was the time in about 2017 where we probably started looking to raise money for Series A.
Right. And so, of course, when you are profitable, you don't need capital. So you got the money to get a partner who can help you scale. And then you again now close the next round, right? 3 years hence or 4th year hence. So what is the thought process now in the funding process? Why funding? What is the driver behind this funding event?
Yeah, so the primary driver was to reset the value for the business. It's been a while. It was about 3.5 years. The timing was perfect. So acquisitions become easier for us. If you really think about it, even like a startup, a SaaS company with a 2 million ARR, 3 million ARR growing fast would look for 50x, 100x. So our ability to acquire them was weak. So that was one. Second was our ability to hire and retain employees. We give stock options to employees, how we can actually let them see value of it and participate. So a lot of employees are participating in the Series B round. And third, which happened to be a good one for us, we got Jay Simons on the board. Again, we have another partner who has seen and probably built Atlassian for over 10 years. And so can probably help us in the journey for the next 10 years.
Perfect. Sure. So you're building for the long term, basically. So you're getting the partners who can help you build a long-term value. Perfect. So I think one of the key decisions and in the journey of last 10 years, and a lot of our founders went through or is going through India versus the US decision. I'm talking about the personal decision to move to the US or, hire a chief operating officer, head of sales, or a CTO, depending upon your type of company. So what was that period in the life cycle of your journey and how did you go about making those decisions?
Sure. So I'm a bit of an old school person in this manner. I think I believe in like a team sitting together across a table. The team that eats together, sits together, probably chats together. I think that's how the culture gets built in. That's how we probably solve problems quickly. So I think strong believer of building everything in one place. So we probably are building the entire company, mostly in India itself. And then when we probably reached a point where we had clear defined roles, which needs to be closer to the customers, was a point in time where we probably started expanding across the globe. So not just US, we have sales team in Europe as well.
Right. What were your top two hiring mistakes? One of the key thing to scale, obviously, you have great partners, you go profitable, so you have money to spend, your product is great. Both of you are technology is hard, you have a great team in India. But in reaching to the scale where you are today, what are the top 2 hiring mistakes, and how would you go about doing it? If you're doing it again, what will you do differently?
Yeah, so I think 2 mistakes that probably come top of my mind. I think one, many a times you'll land upon people who think about themselves first. Here, what's in for me? What am I going to do here? I think that never works. We have hired such people a lot of times, they never stay with you long. They will probably create more trouble for you than probably help you in the journey. I think you need people who probably should be asking you questions. What is the role I'm going to play to make this big? Will I have an opportunity to do more? You need their value system in place and the commitment to make the organization bigger, not about themselves. The second one, I think if you are a founder who's probably not scaled with a company before or not a part of a scaled journey, I think hiring senior leadership becomes a big problem. It took me multiple iterations of kind of like trying to build a leadership and get it wrong. I think one needs to really hire one. Again, the person who really wants to, who can unlearn a lot of things, is really passionate about making your business big, and is willing to work with you collaboratively, respect you. I think make that work first before probably hiring the rest of the leadership.
Right. That's great inputs, Ridesh. And as you said at the start, you're a techie at heart, scientist. You think about solving the problems, and a lot of our founders are like that, coming from great engineering colleges that we have. So how do you solve the problem of hiring a sales leader, right, or a marketing or a business leader? Because you've never seen one. You yourself don't relate to the people. Maybe you haven't seen there's no muscle memory you have to understand those problems. So that's a key question. I think that a lot of us struggle, right? A lot of founding members struggle, or the team struggle as to when to hire a sales leader, and if I hire, how do I go about interviewing that sales leader? So any tips on that, or any experiences in that?
Yeah, so 2 things I can share from my experience. I think one, if your sales function is just 2 people, please don't hire a big sales leader. I think about you need, as a founder, need to play a sales leader role. I think you need to hire a manager first. Get a manager, scale your team to about 8 to 10 salespeople. Take baby steps at a time. If you have a manager, probably hire another second manager. Probably then think about getting a director. I probably won't recommend hiring like a chief revenue officer, where the title probably can anyone get when you're so small. You're probably going to have more troubles than someone who can roll up their sleeves and work down. Second, if the time is right, when you actually have to hire a senior leader, I would probably recommend meet some of them, spend time with them, understand what they are, talk to your probably like other peers. I think in my case, I think Manav has helped a lot. So has Girish. It wasn't easy for me, but just learn from them, like talk to them on what has worked with them and probably go about hiring a right.
No, perfect. I think this is one of the problems that we have to solve as an ecosystem. Right now, I think we have come to a stage where we're able to build great products. I think I'm seeing early thoughts in GTM as well in the teams. I think hiring and building the teams will be the next problem as an ecosystem to scale. So all your inputs are going to be helped. So what's next stage for Browserstack now? So how are you planning for next level of growth? I think one of the key questions which I want to answer, which many people may not know, right? A lot of you people know Browserstack is a testing company, and in ecosystem also, I heard a lot of calls among investor community also. Browserstack is a testing company. So tell us a little bit about how do you go about positioning the company as well. There's a great value driver. It's great learning for all the founders here, that the way people think about your company also makes a lot of difference about how investment communities thinks about your company. Whether they take money or not is a separate point.
Yeah, so no, a good one, Manav. Like I had that experience in the last few months. That was the first time I probably went about creating a pitch deck in the 10 years of journey of Browserstack. So made me really think deep about the business, how to position, what we really do, and what does a long-term vision looks like. So I think the way we are thinking long is in the next 10 to 15 years, half of the global economy is going to be a digital economy. Can we become the testing platform for the digital economy or half of the global economy? Where 7 billion digital users will be probably accessing applications that are tested on our platform on a daily basis. That's where we want to be in the long term. In the next 5 years, we are probably thinking of two things: how to get to $1 billion in ARR, and how to expand our market. So currently, we think we are a leader in a $25 billion market. How do we expand to 100 billion?
And that leads to the last segment of our discussion today. So obviously one product versus multi-product, right? And Shekhar also asked this question to Sudhir in the previous discussion. So do you think your one product can do it? How do you go about now thinking, or did you put the seeds of multi-product strategy much earlier in the process to increase your TAM? Because that's what you're talking about, that you're strategically increasing your total addressable market, and so that you can grow and reach to those 7 billion users for internet digital users, and therefore create $1 billion ARR company.
So I think multi-product is required. It's about at what point in time of your journey it's required. I think that's the most important thing. So we started with manual testing product. And after 3 years, the number one feature request we had was for test automation. So our customers pushed us to launch a new product. So I would say, like, always listen to your customers. That can be the one early signs, or the right sign, the right time that you probably have an opportunity to launch new products. The second one is probably the market size. If you probably have a line of sight that you'll probably run out of steam soon, or probably in the next few years, I think you probably need to think about a bigger opportunity. But if you probably start diversifying your product lines too soon, it gets very difficult to maintain a competitive advantage across all the product lines. If you really see the best of the products or the best of the companies, make sure they have leader product lines. Like Facebook still is a dominant product for Facebook. Amazon.com is still a dominant product. They just made it bigger and bigger, but they didn't think about launching another product. Slack went big, but yes, there was a point in time they should have thought about expanding it, but there is a right time for that to do.
Right. And in your case, I know you already have multi-product now. At what stage did you started making other products or thinking about other products? And going forward, what's the plan?
So we started second product when we were already over 20 million. That was our fourth year when it was the number one request from our customers. Over 400 customers in 12 months asked for it. We heavily resisted, but finally we gave in. And now that product is over 60% of our revenue. So thank God we did it. And we have 5 products now with the recent acquisition. And I think we probably think a lot before adding a new product line. We want to make it a big market and want to make sure we have a leadership in that market as well. So we'll probably add in about 5 to 7 more products in the next 5 years, which probably takes us to over 100 billion in time.
Perfect. And this is a great story. Probably we should have one session with you on this, when to decide on multi-product strategy. I think this is something which at a growth stage, especially after 10, because it takes 1 to 2 years for your new product to mature and build as well, right? There's typically a 2-year cycle. You can reduce it to 1 year now or even 8 months if your underlying platform, but you literally have to bake in 1 to 2 years to launch the next product. So it is really a very, very insightful conversation. I think one of the last question I have for you is that you almost figured everything out on your own, right? As to when to get the funding, and you were against the tide, went bootstrap for a very long period of time. Of course, you were profitable, so that helped. And then you found the partners, and then now you found the next partner for your growth. So how did you go about learning yourself? That is, of course, one way is to get a great partner in terms of funding when you're starting the company. A lot of businesses don't have the luxury of bootstrapping, right? Because you need more capital upfront. But more important for me is what was your DNA of learning? Because entrepreneurs have to learn every single day, every single hour.
Yeah, so I think my first source of learning is the internet. I think I call internet my guru. Whatever I have, the first thing I'll do is spend 30 minutes finding an answer on the internet or how to go about thinking about it. If I'm not able to find them, then I have a good set of friends and advisors whom probably I'll reach out to. That's how I think about my learning. There were periods of time when you probably get sucked in operationally, but you need to get out of it. I think learning and growing and reading is very important. And after a point, you need to reach a point, at least 4 to 5 hours a day, you can actually spend into reading and solving problems.
Perfect way to organize your time. I think that's the dream for most of the founders, when you can spend 4 to 5 hours on thinking about problem solving or solving actual problems. I'm great you are at that point in journey. Thank you very much, Ritesh. It's great having you on board. And for all the founders, I think SaaS is a great opportunity. As at SaaSBOOMi, we keep on talking about it. And I think as this annual edition has progressed, I think we have now kind of reached at the cusp of growth of SaaS. That's what Ritesh was also talking about, talking about 7 billion digital users. So I think, so all the best to everyone here. Thank you very much, Ritesh. Over to you, Satya.
Thanks for listening, guys. Thanks, Manav. Thanks a lot.
Thank you. Thank you very much, Manav and Ritesh. Again, a very unique story, a bootstrap profitable company that raised money to bring partners and advisors on board. And in the next, I think one of the statements that Ritesh said, it's a great statement to close on, is that in the next 10 to 15 years, half of the global economy is going to be a digital economy, which kind of speaks to the opportunity ahead in the ecosystem. With that, we come to an end to today's sessions. A very big thank you to the speakers and session curators who have spent time to prepare for this session, share their learnings very vulnerably, and kick off SaaSBOOMi Annual. And thanks to all of the founders who are here, who have come together and made this possible. This community is made possible because of all of you. Just a few closing notes. We will be sharing a feedback form with you after this session. Please do take a few minutes to share your thoughts. It helps us improve and iteratively kind of prepare for the upcoming weeks as well. All of you have been added to the SaaSBOOMi Founders Slack community, which you can use to network with other founders. We also host AMAs, share knowledge documents, and have some interesting discussion threads there. So if any founder here does not have access, please email us at hello@saasboomi.com from your registered email address, and we will ensure you are added. We'll also aim to share some key takeaways from the sessions today through email. And now coming to next week's agenda, note that next week we start at actually 9 a.m. Today we started at 10, but next week we start at 9. And we kickstart our workshops next week, actually, the deep dive workshops. And before we do our first deep dive workshop next week, we have this very interesting session, a dialogue on intuition and locking our true potential, which will be run by Anish Reddy, co-founder and CEO of Capillary Tech, Samir Guglani, founder of Morpheus Ananta, and Prasanna, who's partner of Upeka. Do tune into that session. We'll have a quick 15-minute break after that. And finally, we'll have our first deep dive workshop, which is an early stage playbook for Southeast Asia expansion with Ravi Teja Dodda, CEO of MoEngage, and Jayant Paleti, co-founder of Darwinbox, curated by Anish Reddy. So hope all of you have a very nice weekend and looking forward to seeing you at week 2. Thank you so much for everyone coming.